In the next couple of videos, I'm going to have a look at some other factors that we haven't really considered yet that we need to consider when we're selecting an investment and judging whether an investment is really overall effective for what we're trying to do. And those two factors are going to be taxation and inflation. So by the end of this, you should be able to understand what other factors we should consider when selecting investment. You should be able to calculate tax from the interest that's earned, which is what we're going to focus on in this video. Also, you should be able to calculate the effects of inflation on investments and describe the overall effectiveness of an investment by the end. So let's get started today with tax. Now, because when we're investing money, the interest that we're earning from that money, it is a form of income, and any form of income is taxable. So only the interest part of it is taxable, not what the balance of the account actually is. So, you might have had $10,000 at the start of the financial year, and in interest, you might have earned, $50 of interest for that year. You're only going to be taxed on how much you earned from it, because that's the part that's the income, not what the balance is. You're not going to be taxed on the $10,050. You're going to be taxed on that $50 that was part of the income. So that's something that's really, really important here. And how much you do get taxed depends on what your income is. So I'm not going to put what the current, I've currently got the pen on. What the current tax brackets are, because they do change, and this video is going to be up for a while, so it does depend a little bit on what tax bracket you fall into. There are tax-free brackets, so you're not 100% guaranteed to be taxed on everything if you are in the tax-free threshold, but once you start earning a certain amount, you'll get charged a certain percentage, and that percentage comes, you need to pay in tax for the interest that you earn. So because it's a percentage of that amount, it is a percentage of calculation. So if we look at our example here, Marissa earned $1,200 interest, and that's really important here, is the $1,200 interest that she's earned from an investment account. Given that her marginal tax rate, that's what's referred to as your tax rate, is your marginal tax rate, is 32.5%. Calculate the amount of tax that Marissa must pay. Now, if we want to know how much she's going to pay in tax, it's a percentage of question, so it's going to be 32.5% of the $1,200. And if we think of what percentage of means, it means that we need to represent the percentage as a decimal or divide it by 100. So that's going to be 0.325. Of means to multiply, and we're multiplying this with our 1,200. So therefore, our tax here, I'm just going to have to put this into the handy calculator. So 0.325 times 1,200 is going to be $390. Now, something you're going to frequently be asked is, what is your after-tax return on the investment? What this is essentially saying is, effectively, how much did Marissa earn, not pay? How much did she earn? So she earned $1,200 interest before tax. Her after-tax return is going to be that $1,200 subtract away how much she had to pay in tax. So after tax return, it's going to be equal to the 1,200 minus how much she paid in tax, which is $390. So therefore, the after tax return, it's going to be equal to $810. So that's, I guess, the common questions that you're going to be asked here when you're looking at tax. Now, we're not going to be looking at, like I said, what the tax brackets are, and it's something that you don't need to know off by heart because they do change. Like I said, what you might need to do is, if they give you tax brackets and tell you what Marissa's income currently is, you might need to compare that to the tax bracket and then work out what her marginal tax rate is, and then apply it that way. But they will always give you the information to what the marginal tax rate is. You're expected to know how to calculate the tax from there. Now, this might be, part of a much longer question where you've gone and looked at how much interest a account has earned or done some future value calculations on compound interest prior to this, and then it says, hey, Marissa's marginal tax rate is this. How much tax will Marissa need to pay? That's something that you might get in that. It might not just be a separate question like I've got here.